Welcome to this section of my tutorial on IAS 36, Impairment of Assets. If you are coming across my lecture for the first time, please don't forget to click the subscribe button and also turn on the notification bell icon so that you don't miss my upcoming videos. If you are a returning subscriber, I say thank you and God bless you. This is the second part of my tutorial on IAS 36. This is just to complement my earlier presentation. So, in part 1, I've examined the meaning of impairment. I've told you that impairment loss is the amount by which the carrying amount of an asset exceeds its recoverable amount. I've explained all these concepts. Impairment loss, I've explained the meaning of carrying amount, cost less accumulated depreciation and accumulated impairment. The amounts at which an asset are recognized in the statement of financial position, that is carrying amount. I've equally explained the recoverable amount. Recoverable amount. I've told you that recoverable amount is the higher of fair value less cost to sell and value in use. Fair value less cost to sell and value in use. Higher of these two. Higher of this and this. So whichever one is greater. So that is the one that will be chosen. So the recoverable amount will be the higher of these two. So my focus in this part 2 is cash generating unit. Cash generating unit. Cash generating unit is the smallest identifiable group of assets that generates cash outflows that are largely independent of those of other assets or group of assets. I repeat, cash generating unit is the smallest identifiable group of assets that generates cash outflows that are largely independent of those of other assets or group of assets. Now, when you are given a group of assets, there is no way you can identify the amount of impairment loss to a particular asset out of the group or from the group. So the impairment loss you have, you are going to allocate it to the group of assets. Where group of assets are involved, you know that that group of assets is a cash generating unit. How do you allocate impairment loss to cash generating units? Procedures. Procedures for allocating impairment loss to cash generating units. Step 1, monetary assets. Monetary assets. Monetary assets such as inventories, trade receivables. So when you see those monetary assets, most especially current assets, inventory, trade receivable, cash, those monetary assets should not be impaired. They should not be impaired. No impairment. We don't use to impair monetary asset to exclude it from impairment allocation. Number 2, we have specific assets. Where a particular asset suffered an impairment, the amount of impairment loss suffered by that asset is the amount of impairment loss you are going to allocate to that asset. Maybe you have land and building, plant and machinery, motor vehicles, and maybe the motor vehicle got an accident during the period, so and it is completely damaged. That means out of those assets you have, motor vehicle have been impaired. The amount of impairment loss suffered by that asset, where a specific asset is impaired, The amount of impairment loss suffered by that asset is the impairment loss you are going to allocate to that asset. Apart from the impairment it has suffered, no further impairment loss should be attached or should be allocated to that specific asset. That is step 2. Step 3 is goodwill. Goodwill. Then, as much as goodwill can absorb, you should allocate the maximum impairment loss to goodwill. Let us assume you have impairment loss. The total impairment loss is 200 and goodwill alone is 120. That means the whole amount of goodwill will be impaired. The whole of the 120, you are going to allocate 120 to goodwill. Since the value of goodwill is 20, is 120, and the impairment loss is greater than the amount of goodwill. Even though the impairment loss is exactly equal to 120, that means the whole of the 120 will be allocated to goodwill. So, as much as goodwill can absorb, allocate the maximum impairment loss to goodwill. Number 4, other assets. Other assets. Then you are going to allocate impairment loss to other assets on pro rata. You are going to allocate impairment loss to other assets on pro rata basis. That is, you are going to apply proportion. The proportion it bears from the total asset. You are going to use proportion to allocate impairment loss to other assets. By the time we take a work example, you will understand my explanation better. So these are the procedures for allocating impairment loss to a cash generating unit. The first thing to consider is monetary assets. I've told you that monetary assets should not be impaired. Then specific impairment which should be allocated to a specific asset. That is step 2. Step 3 is the goodwill. As much as goodwill can absorb, you allocate such that impairment loss to goodwill. Then after goodwill is other assets. You allocate impairment loss to other assets on pro rata basis. So these are the steps you need to follow when you are allocating impairment loss to a cash generating unit. Now, let's take a work example. A division of IMPS has the following non-current assets, which are stated at their carrying values at 31st December year 4, amount in dollar. Goodwill 70. Property, plant and equipment, which include it comprises land and buildings 320, plant and machinery 110, total 430. Then we have the total of all the cash generating units to be 500. Because these assets are used to produce a specific product, it is possible to identify the cash flows arising from their use. The management of IMPS believes that the value of these assets may have become impaired because a major competitor has developed a superior version of the same product. And as a result, sales are expected to fall. The following additional information is relevant. Forecast cash flows arising from the use of the assets are as follows. Year ended December. Year 5, 185 million. Year 6, 160 million. Year 7, 130 million. One, the directors are of the opinion that the market would expect a pre-tax return of 12% on an investment in an entity that manufactures a product of this type. 2, the land and buildings are carried at valuation. The surplus relating to the revaluation of the land and buildings that remains in the revaluation reserves at 31st December year 4 is $65 million. All other non-current assets are carried at historical cost. 3. The goodwill does not have a market value. It is expected that the land and buildings could be sold for 270 million naira, and the plant and machinery could be sold for 50 million naira, net of direct selling cost required. A. Calculate the impairment loss that will be recognized in accounts of IMPS. B. Explain how this loss will be treated in the financial statements for the year ended 31st December year 4. The requirement A, you have to calculate the impairment loss. The name of the entity is IMPS. Now, solution. IMPS, calculation of impairment loss. We've said that impairment loss is the amount by which the carrying amount of an asset, carrying amount, exceeds its recoverable amount. Now, how much is the carrying amount of the cash generating unit? Now, the amount is in million. This question is obtained from BPP ACCA study test. BPP ACCA study test, Strategic Business Reporting, SBR. So we have the total of the cash generating unit is 500. So that is the carrying amount. So we have the carrying amount of 500 million. From the carrying amount, you less recoverable amount. Recoverable amount. We've said that recoverable amount is, let me say working one, calculation of recoverable amount. Recoverable amount. We said it is the higher of fair value less cost to sell and value in use. How much is the fair value of the cash generating unit? Fair value less cost to sell. How much is that? Back to the question. Fair value less cost to sell. Now, note 3. You were told that the goodwill does not have a market value, so it doesn't have a fair value. It is estimated that the land and buildings could be sold for 270 million naira, So we have the fair value of land and building of 270 million. 270 million. Then, and the plant and machinery could be sold for 50 million, net of direct selling cost. So the fair value of plant and machinery is 50 million. So we have plant and machinery of 50 million. So now let's sum it up. Is 0, this is 12, then 3. So the fair value less cost to sell is 320. Then you also need value in use. Value in use. We say value in use, we say is the present value of future cash flows. The present value of the future cash flows from the use of an asset. Have year 1, year 2, year 3. We have the cash flows. Now back to the question. You were told forecast cash flows arising from the use of the assets. are as follows: year 5, year 6, year 7. This year 5 is the first year, because year 4 in consideration will be year 0. So this will be second year, while this will be the third year. So we have cash flows of 185 million, 160 million, and 130 million. 185 million, 160 million, and 130 million. Discount factor at, so we're given the cost of capital of 12%, because you were told the directors are of the opinion that the market will expect a pre-tax return of 12% on an investment in an entity that manufactures a product of this type. So this is the cost of capital. That is the discount factor. So we have at 12%. So for the first year, you know, this the present value, the discount factor, 1 plus R. This is the formula used to power minus N. If R is 12%, rate of returns of 12%, 12% is 0.12. 1 plus 0.12, it will be 1.12 raised to power minus N. So for year 1 now, when N is 1, so we have 1.12 raised to power minus 1. That gives us 0.8929. 8929. For year 2, that means N will be 2. So we have 1.12 raised to power minus 2. That gives us 0.7972. 7972. For year 3, N will be 3. So we have 1.12 raised to power minus 3. That gives us 0.7112. 7118. What is the present value of that? Amount in million. So you multiply the cash flows by the discount factor. 185 times 0.8929. So the present value of that is 165.2. Then this will be 160 times 0.7972. That gives us 127.6. Then this will be 130 times 0.7118. That gives us 92.5. So if you sum it up, 92.5 plus 127.6 plus 165.2, then that is total 385.3. Now the value in use is 385.3, and the fair value less cost to sell is 320. So the higher of the two, this is the higher. Value in use is greater than the fair value less cost to sell. Therefore, value in use will be considered. So that means our recoverable amount will be the value in use, since it's greater than the fair value less cost to sell. So our recoverable amount is 385.3. 385.3. So if you deduct the recoverable amount from carrying amount now, so we have the impairment loss of 114.7. That is the solution to the first part of the question. The impairment loss is 114.7. You have to explain how this loss will be treated in the financial statements for the year ended 31st December year 4. Now, if you look at the question, you are given a group of assets. the impairment loss calculated cannot be identified to a single asset. You want to identify it to the group of assets. So since it is attributable to the group of assets, that group of assets can be called cash generating units. So you are going to allocate the impairment loss to cash generating unit. Allocation of impairment loss to cash generating unit of IMPS. That is the name of the company. Now, we have assets such as we have assets. The number one asset is goodwill. Goodwill. We have the carrying amount. The carrying amount of the goodwill is 70 million. 70 million. Then we have property, plant and equipment, which comprises land and buildings. Land and building of 320. Then plant and machinery. Plant and machinery of 110. You want to allocate the impairment loss to these cash generating units. The total carrying amount is 500. Then from our calculation we have the impairment loss. Impairment loss. Our calculated impairment loss, we have the impairment loss of 114.7. 114.7. Our calculated impairment loss is 114.7. Then, if you subtract the impairment loss from the carrying amount, we have 500 minus 114.7. Then we have the recoverable amount of 385.3. This is recoverable amount. Now, I've given you the procedures for allocating impairment loss to cash generating unit. I've told you that the first item to consider is monetary assets. I've told you that monetary assets or monetary items should not be impaired. So, if you look at this question, there is no monetary assets. After monetary assets, then we have specific assets. None of the assets is specifically impaired. Apart from goodwill. Goodwill, we can say goodwill. You were told goodwill does not have a market value. Since it doesn't have a market value, that means goodwill is completely impaired. So, we have goodwill of 70 million. So, the recoverable amount of goodwill will be nil if goodwill is fully impaired. Then land and building, after specific asset, the next thing should be goodwill. Since goodwill is the impairment loss is greater than goodwill, that means the whole amount of goodwill should be impaired. Then after goodwill, we have other assets. Other assets. I've told you that impairment loss should be allocated to other assets on pro rata basis. So we have other assets. The other asset we have in this case include land and building. Other assets. It includes land and building. The carrying amount of land and building is 320. Then we also have plant and machinery. The carrying amount of the plant and machinery is 110. The total of the two is 430. Now, of the impairment loss of 114.7, 17 is attributable to goodwill. That means you'll be left with the balance of 114.7 minus 70. You'll be left with the balance of 114.7 minus 70, 114.7 minus 70. Then you are left with 44.7. After impairment loss have been allocated to goodwill, then you are still left with the impairment loss of 44.7 to be allocated. This 44.7, the remaining one, should be allocated to other assets on pro rata basis. So that means land and building will receive 320 out of 430 times 44.7 million. While plant and machinery will receive 110 out of 430 times 44.7 million. So 320 divided by 430 times 44.7. We have 33.3. 33.3 million. Then this one will be 110 divided by 430 times 44.7. Then you have 11.4 million. 11.4 million. So of the impairment loss, 33.3 million will be allocated to land and building. 33.3 million. That means from 320, the kind amount of 320, if you remove the impairment loss of 33.3 million, then you'll be left with the recoverable amount of 286.7 million. Then plant and machinery of 110, if 11.4 million is the amount of impairment loss allocated to that. So you'll be left with 110 minus 11.4, then recoverable amount of 98.6 million. If you add 98.6 million to 286.7 plus 286.7, then you have 385.3 million. You were told that the land and buildings are carried as valuation. The surplus relating to the revaluation of the land and buildings that remains in the revaluation reserves as 31st December year 4 is $65 million. All other non-current assets are carried at historical cost since land and building were revalued. The land and building which were previously revalued now is subsequently impaired by 33.3 million. Because the land and building has been revalued, the impairment loss of 33.3 million relating to land and building should be treated as a revaluation decrease until the carrying amount of the asset reaches its depreciated historical cost. So that is how this impairment loss should be treated. So that means you are going to reduce the revaluation reserves of 65 million by 33.3 million. That process will continue until the land and building reaches its depreciated historical cost. So this is the end of this part. So thanks for watching ZICA. If you have not liked the video, please don't forget to like the video. Also share it with others.